What's up, everyone? It's Natranand, and welcome back to InsureSavvy. Today, we're exploring how to build financial protection without traditional insurance. We're talking real, actionable steps to create your own safety net, even if you can't or don't want to buy standard policies. These strategies are distilled from deep research and insights from financial experts and communities worldwide. Think of this as building your own custom financial armor, practical, empowering, and totally in your control. By the end, you'll have clear tools to boost your financial security and peace of mind. Ready to hack your financial safety? Let's dive in. Hack number 1. Let's dive into a fundamental strategy for building a solid financial foundation. This isn't just about saving money, it's about creating a safety net that will protect you from life's inevitable curveballs. Build an emergency fund. This is the bedrock of financial security. It's your personal financial first aid kit. Think of it as your go-to resource when unexpected financial bumps and bruises occur. This fund is your buffer against job loss, that sudden and often unforeseen event that can throw your finances into disarray. Medical bills, those unexpected healthcare costs that can quickly escalate and become overwhelming. Or car repairs, because Murphy's Law dictates that your car will break down at the most inconvenient time. These are just a few examples of why an emergency fund is absolutely essential. Your first line of defense. It's the financial wall that stands between you and potential disaster. It provides a safety net, allowing you to navigate unexpected challenges without derailing your long-term financial goals. Start small. Don't get overwhelmed by the total amount you eventually want to save. Even $20 or $50 a month adds up over time. Consistency is key here. Think of it like planting a seed. With regular watering and care, it will eventually grow into something substantial. Aim for 3 to 6 months of essential expenses. This is the gold standard for emergency funds. It provides a comfortable cushion to cover your basic needs if you were to lose your income. Rent, your biggest monthly expense for many. Food, the fuel that keeps you going. Utilities. These are the non-negotiable costs of modern living. Track your spending to know your real needs. Differentiate between wants and needs. Understanding where your money goes is the first step in controlling it. Then set a realistic savings goal. Break down the larger goal into smaller, more manageable milestones. This will make the process feel less daunting and more achievable. Use a high-yield savings account for easy access, but less temptation. You want your money to be readily available in an emergency, but not so accessible that you're tempted to spend it on non-essential items. Automate your savings. Set up transfers every payday. This set it and forget it approach ensures that you're consistently saving even when life gets busy. So it happens without thinking. Make saving a habit, not a chore. Treat this fund as sacred. This is not your vacation fund, your shopping spree fund, or your I deserve it fund. It's for true emergencies, not splurges. Differentiate between a genuine emergency and an impulse purchase. If you have a health savings account, HSA, use it for medical costs and free up your emergency fund for other needs. This is smart financial synergy. The peace of mind from having this cushion is huge. It's difficult to overstate the emotional benefits of knowing you're prepared for the unexpected. Less stress, knowing you can handle financial surprises, more control. You're in the driver's seat of your financial life. If you dip into it, and sometimes you will need to, make rebuilding a priority. Replenish it as quickly as possible. Remember, this isn't a one-time task. It's an ongoing commitment to your financial well-being. Think of it as regular maintenance for your financial health. Financial giants like Fidelity and Morgan Stanley agree. An emergency fund is the cornerstone of stability. It's the foundation upon which you build your financial future. Protect your long-term goals by having this short-term defense. Don't let unexpected expenses derail your retirement savings or other important financial objectives. Start today, no matter how small. Every little bit counts. Every deposit is a step toward security. You're building a brighter, more secure financial future with each contribution. Your emergency fund is your financial armor. Build it, protect it, and let it protect you. It's your personal Fort Knox, safeguarding your financial well-being and providing peace of mind in an uncertain world. Hack 2. Invest in your health. It's the best insurance you can buy. Think of it as your ultimate safety net, protecting you from unexpected financial burdens down the road. It's about building a foundation of well-being that pays dividends in the long run. Staying healthy means fewer doctor visits, less time spent in waiting rooms, and more time enjoying life to the fullest. It's about proactively managing your well-being so you can avoid unnecessary trips to the clinic. lower bills, reduced medical expenses, and a lighter load on your wallet. Healthcare costs can be a significant drain on your finances, but by prioritizing your health, you can minimize these expenses and less financial stress. Knowing you're taking care of yourself can bring peace of mind and reduce anxiety about potential health-related costs. It's about creating a sense of security and stability in your financial life. You don't need a gym membership. Expensive monthly fees aren't necessary to achieve your fitness goals. Walk. A simple stroll in your neighborhood can do wonders for your health. Bike, cycling is a fantastic way to get exercise and enjoy the outdoors. Or use free online workouts. There are countless resources available online that can guide you through effective exercise routines without costing you a dime. Eat balanced meals with whole foods. Focus on incorporating plenty of fruits, vegetables, and lean proteins into your diet. Cook at home to save money and control ingredients. Preparing your own meals allows you to avoid processed foods and unhealthy additives while also saving money on restaurant bills. Preventative care. It's a cornerstone of maintaining good health. Regular checkups, screenings, and vaccines. These are essential for detecting potential health issues early on, catches problems early, and saves money. Early detection often leads to less invasive and less expensive treatments. Use community clinics or telehealth for affordable care. These resources can provide access to quality healthcare at a fraction of the cost of traditional medical settings. Mr. Money Mustache's story shows how an active lifestyle and smart choices can save thousands each year. His example demonstrates the powerful connection between health and financial well-being. Good health habits. They're the building blocks of a vibrant and fulfilling life. Exercise. Regular physical activity is crucial for both physical and mental health. Sleep. Prioritize getting enough restful sleep each night. Stress management. Finding healthy ways to cope with stress is essential for overall well-being. Pay off like compound interest. The benefits of investing in your health accumulate over time, leading to significant savings and improved quality of life. Mental health matters too. Don't neglect your emotional and psychological well-being. Manage stress and prioritize well-being to avoid costly cycles. Unmanaged stress can lead to a variety of health problems, resulting in increased medical expenses. Learn basic health literacy so you know when to seek care and when to treat at home. Understanding your body and common health issues can empower you to make informed decisions about your care. Being healthy gives you more control over your finances, allowing you to allocate your resources towards your goals and dreams and your life. You'll have more energy, vitality, and freedom to pursue the things you love. Each healthy choice is a deposit in your health fund, a long-term investment in your well-being, lowering future costs. These small, consistent actions can have a significant impact on your overall healthcare expenses. You don't have to be perfect, just consistent and intentional. Small, sustainable changes are more effective than drastic, short-lived efforts. The cheapest, most effective insurance is a healthy lifestyle. It's a proactive approach to managing your health and finances. Invest in yourself now for fewer expenses and more freedom later. Prioritizing your health is an investment that will pay dividends throughout your life, allowing you to enjoy a longer, healthier, and more financially secure future. Hack 3. Pool resources with others. Build a community safety net. Form a mutual aid group or cooperative with trusted friends, family, or neighbors. Everyone contributes a small amount or offers skills, creating a fund or support network for emergencies. This spreads risk and makes big expenses manageable. Organizations like GEO and SELC show how community pooling builds resilience and equity. Trust and clear agreements are key to define what counts as an emergency and how help is given. Transparency keeps things fair. Everyone knows how the pool is used. These groups are flexible, adapting to members' real needs, not just a checklist. The non-financial benefits are huge. Support, solidarity, and less anxiety about the unknown. Start small, maybe just a helping hands pact for specific emergencies. Address challenges with clear rules and open communication. Community pooling isn't for every situation, but it's a powerful supplement to traditional safety nets. Sometimes the strongest protection comes from the people around you. Build trust, share resources, and create resilience together. Insurance with a human face relationships, not just transactions. Hack 4. Become your own insurer. This is about taking a strategic approach to managing risk and building long-term financial security. It's not about recklessly abandoning all insurance, but rather about thoughtfully evaluating which risks you can effectively manage yourself. Save and invest for the long term. This is the cornerstone of building a financial fortress. Think decades, not days. The power of compounding works best over extended periods, turning modest savings into substantial wealth. Instead of paying premiums for every conceivable insurance policy, consider a different approach. Set aside that money and let it grow. Treat those potential premium payments as investments in your own future financial well-being. Imagine the possibilities if you consistently directed those funds into a high-yield savings account or a diversified investment portfolio. Compound interest, the eighth wonder of the world, as some say, turns small, regular savings into a powerful financial fortress. It's the magic of consistent saving and investing, allowing your money to grow exponentially over time. Be strategic. Self-insure for predictable or manageable risks. For example, instead of buying extended warranties on electronics, set aside a repair fund, but keep essential coverage where needed. Health insurance, for instance, is a critical safeguard against potentially devastating medical expenses. Don't skimp on the essentials. Frugal living frees up more money to invest. It's about making conscious choices about where your money goes. Repair, don't replace, whenever possible. Extend the life of your belongings and save money in the process, and avoid lifestyle inflation. As your income increases, resist the urge to drastically increase your spending. Use low-cost index funds or ETFs to build wealth over decades. These investment vehicles offer diversification and low expense ratios, making them ideal for long-term growth. Consistency is key, the magic ingredient in any successful financial plan. Even small amounts add up over time. Don't underestimate the power of incremental savings and investments. This approach gives you more control and can save you money in the long run. By taking a proactive approach to your finances, you can avoid unnecessary expenses and build a more secure future. Your emergency fund covers short-term shocks. It's your financial safety net for unexpected expenses. Your investments cover future needs and build freedom. They are the engine that drives your long-term financial goals. Assess your risk tolerance and plan accordingly. Understand your comfort level with market fluctuations. Don't ditch critical coverage recklessly. Protect yourself from catastrophic events that could derail your financial progress. The goal: financial independence and resilience, not just protection from loss. It's about building a life where you have the freedom to pursue your passions and live on your own terms. Every dollar you invest is a step toward freedom and security. It's an investment in your future self and your peace of mind. This is a proactive, offensive strategy, taking control of your financial destiny. Build wealth, not just barriers. Focus on growth and opportunity, not just protection from potential setbacks. Stay disciplined, think long-term, and let your money work for you. Create a system where your investments generate income and build wealth even while you sleep. Your future self will thank you for starting today. The sooner you begin, the more time your money has to grow, and the more secure your financial future will be. There you have it. 4 hacks to build your own financial safety net: emergency fund, health investment, community pooling, and long-term saving. These are actionable steps you can start today. Pick one and begin. The journey is a marathon, but every step counts. Empower yourself. Take control of your financial future. Thanks for watching InsureSavvy. Like, subscribe, and share your tips in the comments. Stay savvy, stay secure, and remember, the best plan is the one you stick to. Peace out.